selling 50% of your Cardano at $3. Could you imagine? I'm going to explain exactly why I'm talking about that in this video, because there is still more room to the downside to a Cardano ADA target. I want to do some short-term analysis in the last part of this video, but please keep in mind that most of this video will be zoomed out. It is macro bullish because I am bullish on Cardano and crypto right now. So either way, if you're bullish, and even if you're not, hit the subscribe and like on the way in. If you're not in our intelligence system with our risk models, including ADA, hit the link below, get set up with a free trial. I'm going to show you exactly how to use this system, at least one way, in this video in terms of taking Cardano profits. So let's start here. I'm not going to show the clip, but Eric Trump, Q4 will be unbelievable for crypto. Take it for whatever you want to take it for. I know how I'm taking that. I like his opinion. I agree with his opinion. And I genuinely think Q4 is going to be very strong for crypto. I know it's very speculative, but I want to just kind of underline it with maybe some more firm data. That is this. Trueflation is measuring inflation under 2%. This is massive for really the fundamentals of a strong business cycle for risk on assets like Cardano. So this is less speculative. This is more data-driven. Real-time metrics are much more important than antiquated government calculations. So here's real-time metrics. This is good to see that we are under 2% right now, again, in terms of Trueflation data, because we want to see the continued interest rate cuts, not only for the rest of this year, but into 2026. This will be good for risk on assets like Cardano. These are two little things I wanted to start this video with because this is a very macro-minded video, and this is very much discussing a continuation of higher highs and higher lows for crypto, and in this case, ADA. So here's what I want to do. I'm not going to read this entire thing, but I received an email from a user, a member of our intelligence system, said, I just wanted to follow up and say that Zero AI updates are amazing. I've been able to do much more meaningful analysis because of them. Look what he did. I downloaded the entire price history of ADA, and you can do this with all of the assets in our system, like a similar approach, from CoinMarketCap, and fed it into ChatGPT to analyze the last bull run. It generated a detailed chart. Then I asked Zero AI to scan the risk model score for ADA during those same months, and it noticed the score climbed above 80 in February 2021 and in several of the following months, but never before. So he's using ChatGPT, leveraging it to collect very simple cycle data, and then he's feeding it to Zero. This is our autonomous AI, which is trained on our risk models. Our risk models are proprietary. You cannot find them anywhere else. And this is enterprise grade just models that, this is something institutions would like to use. And I really enjoy seeing just our users being able to leverage this system and get analysis and data that they just can't get anywhere else. And that's exactly what is happening here. So check this out. And I'm going to explain why I'm talking about selling 50% at $3. And Darius, who actually sent this message, might be curious to know why as well, as I kind of dissect his plan here. But he's basically saying, if this were the current bull run, I would have sold my ADA the first time it went over 80. So if you go look at ADA's last cycle, just to give you a sense of, I think, what he's saying, here's ADA breaking 80 risk, right, on the risk model. It's in February 2021. So if you go to our risk model itself, here's the move. Here's what it looks like. There it is, hitting 80, February 2021. Right? So what he's saying is, if he was here last cycle, I think if he had all the data that he has now, this would have been a great time to sell. And we're going to see how much he says he would sell. But he goes on, that would have given me significant profits, not the absolute maximum, but definitely enough for me. So I asked Zero to scan the risk model during February 2021 for the price points of when it got over 80 for the first time in the bull run. And there it is. You can just see it's giving that data over 80 for the first time. This will be invaluable in helping me form a strategy this bull run, perhaps sell 50% the first time it gets over 80, then ride the pullbacks and sell more the next few times it gets over 80. Something I need to decide, but it's fun. So I want to play into what he's saying here, because I want to really speculate even in terms of when the risk score for 80 for ADA might be above 80, right? So let's go look at the chart here and let's start dissecting this. And we're gonna kind of use our exit planner to do this. So first off, if I were Darius, I'd go into our exit planner, I'd hit risk mode real quick, and I would add the 80 target and say, you know what, 50%, boom, save and enable, and you can just put 80 risk or ADA 80 risk, whatever you want to name it. So he's emailed and notified when it hits 80 risk. But then you go to price mode. We have 100,000 in the demo here, 25-cent average cost. I want to delete all of these kind of predefined exits. So let's visualize what 50%, a sell of 50% could potentially look like at $3. And why am I using $3? Let me show you. This is completely based off of what Darius is saying. Notice two things. Number one, February, breaking 80. It's hitting 80. It's above 80 on risk. There it is. There's the move up there. But what's notable and meaningful to me is really two things. One of them being, when did it break the bull market doors and what was the risk score, right? So breaking 65 risk when it broke the bull market doors. Now, if we look at the bull market doors this cycle, and by the way, the bull market doors, if you haven't seen any of my analysis, is basically going into that bear market, that rejection off the 20-week, boom. It's breaking above that area. So last cycle was around 41, 42 cents. This cycle, it is around 120 to 125, right? What will the risk score be when we're hitting that area? I will tell you one thing right now. I don't even think it's going to be as high as last cycle when it was 65. A lot of that has to do with all of the compression that we've seen this cycle. And we can even go to the risk model for ADA and we can actually look at, well, it tested those bull market doors, $1.21 in December 2024, and it topped out basically at 52. So 52, I would just say 50, I think is a very, as far as where we are right now, because ADA is at 78 cents. And if you get a sense of kind of how far away it is from the bull market doors, it's not that far. I think 50 range is a good range. If ADA starts making a run for it, we could be in the 50s. I don't think we'll be at 65 once we're getting to this area. Now, that's one thing. That's important because here's where we start speculating on price and selling 50%. If ADA makes the run, right, to this area, and let's say it's at 50, right? Well, last cycle, how fast did it go from 65 to 80? Quite fast, within weeks. It went from 65 to 80. And we're talking about like, you know, a very fast double in price. There's 42 cents. Here's like 90 cents. Now, the reason I'm saying that's important is because if you look at the price range, right? It's 140 to 150% move from the bull market doors. So if I take that similar move around 150% from the bull market doors, we are at around $3. So here's what I'm saying. Because risk score is speculatively going to be around 50 is what I would guess. And I could be completely wrong there. It depends how the price action operates for ADA. But let's say it's 50 and then we're making a similar move above the bull market doors, similar to last cycle, right? And we get this 150% move to $3. If that played out, right? And we can even take a fractal, right? If some move like this played out, and I'm not saying I think it will, but if we got a move like this on ADA, I don't even think ADA would be at a risk score of 80 at that moment. I do not think so. Because the compression of this cycle has kept ADA's risk score lower. Now, with that being said, I think it could very well be kind of in the 70s area, and it could be 80. It depends how the move happens. But my point being, if you go to the exit planner, I really do think whether it ends up being a 70 risk or an 80 risk, there is absolutely no harm, in my opinion, to sell 50% of a portfolio. In this case, it would be 50,000 ADA at $3. Boom. So there's $137,500 gains 550% gains, and you still have 50,000 ADA left over in this speculative environment where risk might not even be at 80 yet. But let's say it could be. Let's say it's at 80, but what if it's at 70, right? So imagine that. You go back to the chart, and this is where you start planning and speculating. And you can set your risk alerts for risk mode, right? So that you are not as speculative. You're just like, I don't care if ADA is $2.11 and it's hitting 80 or $3.89 and it's hitting 80. I want to be alerted and I want to make the decisions when that risk score is being hit. But I really do think pairing it with the speculation and pairing it with a visualization of what's selling at certain prices, I think it's very valuable, especially because when I even just go and I look at this plan, right? We just identified kind of this area of 50,000 ADA at $3. I'm kind of like, and I think I've talked about this before. What about for all of the ADA holders that were accumulating this entire thing? There's no harm, in my opinion, if we start getting a breakout, we start breaking the bull doors, $1.25 up to $3. If people want to take profit in that area, there's no problem, in my opinion. And then on the flip side, you want to have left over. So say you did sell 50% at a $3, maybe it's 70 risk score, it's 80 risk score there, whatever. You want to have extra left over for if we get a similar move back here, right? So we're getting some type of really just nice bull market peak of some sort from that area, and we're hitting, $5, we're going higher. It depends how this will play out, but you want to go back into your exit planner and you want to start adding your exits for that speculative move. So you're like, I'm selling more at 450. So like, let's just say another 10%, and then you're going to do another at 550. Let's say another 10%, right? So now you have 30,000 ADA, you have $232,000 gains. You've taken profits at 3, 450, and 550, and all the while you're monitoring risk. But I think what's most valuable about Darius and his email here is he's formulating his own risk tolerance plan. Because based off of the numbers he ran, he identified 80 as an important area. And I want to challenge that actually in this video in a very kind of candid way, because the thing I want to challenge is, what if this cycle is so different that it just keeps doing what it's been doing? This swing high and just long consolidation, swing high, long consolidation, right? Darius, even right to you, I'm saying this to you, one way to use our system. What if we get a swing high here? It's $1.85 and it's not an 80 risk score yet. And then we consolidate again. And you could be like, nope, I don't care. I wouldn't take profit. Even if this was a 65 risk, a 70 risk at $1.80, I'm not taking any profit yet. That's fine. But what if it just keeps doing that? And then the risk score consolidates and it just doesn't hit 80 in this like parabolic way, because we can't sit here and assume that the risk model will repeat itself, right? And so that's one thing I would not do, is just say, hey, we're going to get a move exactly like this. It's going to go from 65 to 80 exactly like this. This cycle has already proven that's not going to happen. But what you can do is average out in a way that just kind of plays into your own risk appetite from a price perspective as well as a risk score perspective. So 80 to 100 in risk on an ADA exit planner, especially as right now it's at 33 with a price point of 78 cents. Think about that. When it was in the 30s, I think it was a 35 right here. It was 8 cents, everybody. Our risk score right now is right here, similar to right here. Last cycle at 8 cents, but we're at 78 cents. So when we're at 80 to 100 on risk, I think price is going to be a very, very, very nice area for taking profit. But along the way, what do consolidations look like? And I would really encourage you to identify areas, not just with risk, but with price in a higher high, higher low environment of what taking profits could look like for you. And then you can go into our exit planner and you can visualize what those gains will look like if you're happy with that. And you can reevaluate not only after you do the plan, but as price does maybe increase and risk mode changes, you can start reevaluating your price mode plan. So that's what the system is for. Just awesome to see Darius in the way that he's kind of breaking down his own plan. And I'm very curious to see how this cycle plays out. Going over to ADA on the daily chart, I did want to kind of break this down for you because I know this is a bullish speculative video in terms of Cardano and taking profits at all-time high areas. But at the end of the day, here we are. We're still in this just insane consolidation since last December. I mean, we're going almost on a year, and ADA still, even in the short-term dip, has target to the downside. So let's monitor to see how this week progresses as we go into a new week. But just please keep in mind, we have this target to the downside in like the mid 60-cent area out of this pattern. The thing that is still in play is a busted pattern. We might see Cardano and crypto start rallying. If this starts happening, we might be in store for a bull move sooner than probably sentiment is looking like. Meaning most people in terms of sentiment is what I'm seeing. They're just so worn out and tired, and I get it. But imagine a move like this, a busted pattern on this Cardano chart. What could play into that is the 200-day support. So we fall in, we might hover above that area, and then we might make the move to the upside instead of breaking to the target. Ethereum just did something similar in its own charts on the, I believe it was the weekly chart, right? If we go look at an Ethereum chart really quickly, the move that I'm talking about is, and it wasn't so much the weekly chart as it was the daily chart. So, and I really want to break this down because it's very meaningful in terms of like watching all of these altcoins. So the triangle that Ethereum just broke out of is very similar, and we're getting a little bit of a snapback. I'm not so sure that's going to be a busted pattern. If it's not, and we continue to Ethereum's target, you can see how ADA is likely going to continue to its own target to the downside. So that's ADA to the downside. To the upside is potentially in play. If we get a move to the upside, 91 cents is a huge area of resistance. And all we can do right now is wait. I will monitor as well. I just want to mention this. This was the biggest thing I wanted to mention. Monitoring the RSI. So if ADA starts making a move to the downside, right? We start making a move to this green line. I think the bottom will be close for this particular ADA bottoming out area. And you can just see right back here was the bottom in June of 2025. I know in previous moves, you can see falling to that green line was actually kind of like the beginning of a continued lower low move. But considering where we are in the business cycle, considering going into Q4, pro-crypto legislation, crypto market structure, I do think that this current consolidation and dip that we're in will not be like this overextended type of lower low dip. I don't think it's going to be one of these. I could be completely wrong. We could be in February 2026 testing 53 cents because that's precisely what happened, right? So don't hold me to it. I'm just giving you my opinion. I think even if we do go lower right now, it's going to be a shorter term move than a longer term one. So those are my thoughts today. I hope you enjoyed this video, or at least got some, valuable content or ideas from this video. If you did, please subscribe, hit the like. If you're not in our intelligence system, once again, go check it out. Check out the assets that we have. We will be looking to add another asset next week. So hopefully that goes smoothly. We're building the risk model soon, and we will release that to members. So appreciate each and every one of you. I'll see you in the next video. God bless.